Yeah. This is your boy, the Nixpo man. So as we are seeing here, I know you forgot, bro. Okay. So our entry criteria is the third touch of the trend line, which is this one. This is our entry criteria here. So you see that we get into the trade only when we see the rejection, and you get it. We get into the trade only when we see a rejection on the trend line. So for a trend line to be valid, it has to touch at least 2 points. So you see, this is the third point. Third point is the powerful point. Then we have fourth, but this one have to be backed up by an order block, or it is retesting the support which has become the resistance. This is our another entry criteria. So as you can see from here, after the third touch, we had a massive rejection. As you see, there was a pin bar rejection, and then we had a bearish engulfing rejection on the order block. So we enter after the bearish engulfing candle. Then we place our trades, targeting this low. That's our target. So on this trade, we are having a target profit of 67 pips. That is our target profit, 67 pips. Okay, this is backed up enough, as you can see. Okay, so for us to have a valid support and resistance, which is some people would like to call the demand and supply area, as you can see from this platform here, this we're in a downtrend, which means you're supposed to have higher highs and higher lows. So from here, it did break this low was broken, which makes our downtrend valid, but the higher low was broken. So this is a break of market structure, which means that the market is changing its direction. So the last candle after the break of structure, that's our order block. So we wait for order block to be tamed again so that we can buy, but it didn't buy. It broke through the order block. So if the order block is violated like this, we have to wait for a retest of the order block. So we should have valid confirmation from the retest. So this one is more valid enough, as you can see that it has been rejected. Yes, here, then it has been rejected from the order block right now, as you can see, and then it has been rejected from the trend line. This is a valid setup. You place your sales after the bearish candle, then your target profit should be this double bottom here. As you know, there is liquidity here, it has to be taken out. So your take profit is this liquidity, which is going to be taken out by the market. So we'll be waiting for a retest. So we know that this liquidity is going to be broken. So we have another order block here, this candle. We wait for the market to come back to the order block and we sell. Let's see what happened here. It didn't come back. It kept on going down, creating higher, creating lower lows, as you can see, it went down. So here we'll be chasing for continuation order blocks. So as you can see, this zone was broken by this candle or the M15 time frame. So we'll be waiting for the market to come back to that zone. So here you come and put our, as you can see, that the continuation order blocks, the supply and demand areas, as we all know, they are being mitigated. As you can see, they are being mitigated, right? So this one is the last bearish candle before this low was broken here. So there was a break of market structure. So we see which candle was responsible for that. We target that area. As we target that area, we know that the market is going to come into that zone. So we sell from that zone after a good confirmation from the market. So sometimes you may have a losing trade, but odds are in your favor, high probability setups. So as we come to this one, we can see that there was a massive break of structure breaking this double bottom here. So you have to find the candle which was responsible for that. As you can see that we have this candle here, that is our order block. Are we all together? If you have been left out, you can tell me, then we'll see what we can do. Yes, if you want me to repeat, I will repeat. Okay, yes. Where did you not understand? Okay. Yes. Okay, so what I'm trying to say here is, for your order block to be valid, it has to break a low, or it has to invalidate a market structure. Yes. So here, as you can see from this angle that I'm viewing it, you can see that these are two lows here, and they were broken at this zone. So we have to find the candle which was responsible for that break of market structure. As you can see that this was the candle. So you have to wait. You see, this move happened at like something like let me just check the time. Yes, the move happened at 6:30. Then the order block was mitigated the next day at at 4:45. Yes, that's when it was mitigated. So you know that this is a high probability sell, so you have to be looking for sales. So V75 on S was selling for the whole day. Yes, that's what you have to look for in the market. I like to use M15 order blocks, as they are more powerful. You can check. Yeah, M15 is more powerful. M5, yeah, powerful, but it has to be something like a short term. Yes, but for M15, it's going to be something like a trade for something that can go for an hour or so. So you be like, you hold your trade for an hour. Yes. So it was mitigated today, and this was a higher probability setup. So you have to be looking for the break of structure in order block before you enter your trade. Yeah, so there are set rules. Number one, to make the setup valid, there should be a break of structure. Number two, there should be an order block to validate the structure. So you have to wait for the market to come back to your order block. So before you place your sales on this one, you have to check if there is rejection. Sometimes the order block is violated, and it will be tagged from the back. like when the market is retesting, it will be used as a demand area if it's this one here. Then if you are selling, it will be used as a supply area. So here we have an order block. This one here, this order block, he was responsible for this break of structure. You see, so we were waiting for the market to come back to this zone here. It didn't. So you see that the order block was violated here. As I was telling you, that you have to get into the trade after a strong rejection or a confirmation from your candlestick. So as you can see that this order block was violated. So we do not have to assume that it's going to tap from the back here. So we're anticipating that it will be like this, and then comes back at this zone, gives us some rejection and sell. We have to see this. And if it doesn't do that, it will violate it again, come back, retest, leave it, goes up, or it won't be touched forever. So this was the class for the day. Thank you for watching. We'll catch you up next time, tomorrow same time. So what I'd like you to do, you have to start on your own. See where you will roll and everything. So we have to use M15 setups. Then for entries, let's go to a lower time frame. Like you can go on your M1 for precise, M5 for medium, then high risk entries on M15. Okay, thank you.